Okay, hi there guys. Hope you can hear me clear, loud and clear. Just let me know on the G'day Paul. Helen, how are you? Brent, how are you, mate? Ivy. Just let me know if you can hear me clear and then we'll get up and running. Chris, how are you, mate? Now, I'm guessing you can all hear me clearly. All right. Sound is great. No, fantastic. All right. Just needed one person just to make sure I've got everything plugged in right. You are echoing my sound, Brayden. I got a feeling it's probably because I got my head stuck in a cupboard. If anyone that doesn't know, I set up my desk. We had a cupboard, and I've made the office. It's had a nice big cupboard, so I just sort of took it apart, cleaned it up, put some shelves in there, tucked the computer away in there. So every now and then I lean too far forward, it echoes too much. So that could be the problem. All right, just to start with, just while we get up and running, okay, yeah. It is when I lean forward. There you go. Before I get started, we send out an email. So anyone that's on here from an email to Trade Direct, and you're wondering what's going on with TradeSetup, it's the same guys behind the scene who run it. So we've got the two areas going. We've got the trading platform, which is Trade Direct 365, and we've got obviously the alert service and discussions that we do through TradeSetup. So if you hear from there, welcome. Thanks a lot for joining us. And if you listen later on, again, welcome and thanks for joining us. Now, for you guys there, anyone else that's new, what you can see on the screen there, you can see our Twitter. So the top left-hand corner, you can join us on Twitter. Top right is Facebook. I think Twitter's obviously the best feed. We're probably more active on Twitter than anything else. Facebook's more of just I guess you've got to have it nowadays, don't you? The bottom right-hand corner, you can subscribe to us on YouTube also, and you'll get notified anytime we do go live. So if you do subscribe, and that's all you want to do, that's fine. You'll get anytime we do put up something through YouTube, we do a live stream or any sort of presentation like we've done in the past, it will pop up on your YouTube channel and just notify you that we've actually done something. So that's it. Obviously, the general advice warning. We only ever give general advice, not specific, or we don't take into account anything that you're doing or your needs, or we're not that way inclined, but yeah, just a general advice there. So again, like I said, welcome. Well, today, I think there's still a bit to discuss. I still want to keep well and truly focused on the macro theme. I think it's, g'day Chris, so let me know how you go, mate. Look, anytime you've got a question, just chuck it into the chat. So the way we sort of run it, if anyone else there that's listening, the way we go through it is more a bit of banter between us. It's always good to have a bit of banter. I think it's good fun. It makes me happy anyway, whether you like it or not. I think Helen quite enjoys it, and Paul. The way we run it is pretty much chat about the markets, what we see the biggest themes being, and how that could affect us, if it's over, if it's not. I mean, at the moment, obviously the theme is the market belting, which we've got the last few days, and whether or not that's over, do we tread cautiously? Do we dive in trying to buy cheap stocks? I'm just basically giving you my opinion through the years of trading my own stuff and trading at some clients years ago as a broker. The way I see things, we'll go through a bit of that. So we always start off with talking about the general markets, then we get into some stocks that we're looking at through our alert service, anything that we find interesting. It doesn't have to be shares. It can be, if you wanted to have a question about euro, pound, any of the currencies, something in general, feel free to chuck into the chat. And like I said, then we open it up, say the second half, about half an hour or whatever, about stocks we're looking at or anything else you want to have a look at, just mainly from a charting perspective. We mainly delve into the charts and what we're looking at. It's the easiest and fastest way to cover everything. All right, we'll start off, like we said, keeping to our macro theme. I think it's very important the way we are at the moment. The market's obviously bounced back again on Friday. Had a good little bounce, 300 points, but considering that it got smashed over 1,000, it's really still trending lower. And I've read, probably everyone else has read over the weekend, bits and pieces about what the market's doing and what we've got to look forward to. Obviously, the bonds are what trigger it, but it doesn't mean the bonds are going to keep depression down, it could go, you know, the bonds could actually rally. So the yield, giving up some yield. So obviously bonds are inverse. The bond prices, which push down, is because the yield is pushing up. So the higher the yield, the lower the bond price. Now, if that turns around and bounces and you get bond prices pushing up or yields dropping, you know, same thing. Bond, we could still get smashed. You know, in the US market, it's not just all based around bonds. Everyone's watching those eagerly, but that could be a trigger, you know, again, later on in the week. So it's definitely something to keep an eye on. Let me get rid of this picture, actually, now that I'm looking at it. And I want to transition, don't I? So you should all see my chart properly, clearly now. So back to the bonds, US bonds. A lot of it, you know, when things like that happen, there's no real rhyme or reason. A lot of the times it could be triggered by something and then just capitulates because of fear, greed, people diving and buying cheap, getting washed out of the market. It could be anything. So when that happens, you know, you just got to, I guess it's good to be prudent, just stand aside and just know exactly what you're doing, I guess. And sometimes at the moment, I've spoken to a few other people that have had a rough time and happy just to stand aside and watch. Nothing wrong with that at all. It's a great approach. If you don't understand, you're always best to stand aside. It's the same when you're in a trade. I mean, I look at intraday trading exactly the same. If I jump into a long and I'm expecting it to do something and it doesn't do it, and it starts acting differently and it's not what I expect to happen, you know, according to my plan. I mean, they are short term, but something starts playing out differently, and I don't know what. I'd rather be out and reassessing, you know, maybe locking a small profit or a small gain than taking a bigger hit or giving up a lot of the gains. I think it's always important to know what you're looking for. So, and if you don't understand what's going on in the market at the moment, there's no need to be in. And if you don't think, you know, obviously you can pick a direction. You can go bargain hunting, but I think there's a few people jumped out there and been bargain hunting. Was it Tuesday or Wednesday? After that first 1,000-point jump, and we obviously popped up. They're doing all right. Then we got polexed again. So, look, anything's possible, but I think it's well and truly a time to be prudent and know what you're looking at. Let's look at the ASX here. We'll just start off here, and we'll try to piece together a global view or global macro view on what's going on. All right, so firstly, the ASX. We sort of backed out. This was the initial just belting we received, and we didn't, you know, on the second time we dropped 1,000 points on the Dow, but if you look at what happened on the actual Dow futures, it's quite interesting. So the Dow got bullied. I think it was about 1,000 points on the index. Then the futures just kept dropping. So the Dow futures kept getting smashed. I think it was Tuesday. I can never quite remember the day. It kept going down another 800 to close to 1,000 points. So, and then it started bouncing, and into the US session, it had a good little bounce, which is probably going to happen. You mostly expect something that got hit so hard to bounce because it's just pure opportunistic trading. Kick it straight back up again. And then we went for the second leg low when the index got belted another 1,000 points. Yet the Dow fell short of the daily lows, if that makes sense. So that's held us actually not in bad stead. We're still trading around that 58 mark. I think we sent out a chart a while ago, the sort of retraction from high to low here. Was this the weekly? This move from high to low is roughly, it's probably a bit extended at the moment. It was around the 58, 20 or 30 mark. And that's where we're give or take a few points. We're there now. And you can see that the first day we pushed down through that 58, 30 or 25. Pushed through that, rejected, a couple of good days. Then the second big move down, we pushed straight through 58, but again, got bought up into the close. Today, obviously we opened lower because the SPY itself got pumped on the futures, which drag our index around quite a bit. That got, I think, knocked on the head quite a bit on European session on Friday. So coming to the US when they bounce, we're really coming off an extended market lower. So it's really just making back some of the losses more than anything else. So that's why we've actually opened down 20 or 30 points, even though the US has pushed higher. So really, we really need to hold up around this 58 to bring any sort of positivity back into the market. And there's still quite a bit to get through, I would think. Especially after the way the market's been cleaned out. A lot of these, a lot of late buyers have been cleaned out of the market, and we've had a good correction. So I think there's still a lot of work to do in my eyes. I'm not just going to jump in because it's buy off support. I'm not into that kind of thing. I'd rather wait for it to see set up. I want to see sellers proven wrong, as in what I mean by that. Most of you even here that have been here for a while means higher lows. So when selling's proven wrong, you want to see the higher lows building. Same like this, when you got this move down, it pushed back up. You got a lower high here, so the bears are winning. They push it down, but then the bulls step in at high low in this here, and you want to see that type of structure push out to play out, and that's meaning that more people are starting to step in. There's more momentum starting to build. You know, they're happy to step in at slightly higher price, especially when we've been beaten down so hard, and that's what I think. That sort of structure could lead us to at least, you know, maybe a push up to 6,000. So if you do it, and longer term you're still wrong, you could still make some money. Does that make sense? Rather than just try to buy off the low here and it goes straight through you down to 5,700, drops another, you know, 100 points or so. That's what you don't want to be, just sitting on the bid. In the way we call it, you know, sitting on the bid. Put your buy in there. If it gets down to support, you know, support's at 5,800. You buy at 5,805, for example. It can easily go straight through that, all the way down to 57. Then you're sitting there, maybe stopped in, stopped out straight away. And you don't want that kind of thing. You'd rather see that the market prove you right. So if it's going to do that, I think we've still got quite a bit of work to do. I just purely and simply looking at this chart here, we've still got a bit of work to do. The weekly trend is still up. That's, you know, that's a good sign. And I'm guessing if you draw across the lows here, low, low, it's going to come somewhere around that 57, 58 mark. Well, let's just do it. So really, the longer term weekly, it's got every reason to hold up down here because it is still, that trend is still up. And when you're talking about growth, if you're looking at that sort of thing, global growth is still good. It's just cheap and easy money has disappeared, and I think that's what's killed people. But we've got another theory, so not really long. I like the pure low, so it could still take us, you know, we could still got a bit of work to do down to 57 potentially. There could be that extension down there. Who knows? We come right back into this buy zone. But I sort of prefer, we've had this pullback here, we've had this leg up. I'd prefer that it holds up at a higher level, and we might just do, and that would all work in well together. A couple of weeks, the market gets choppy, keeps washing out the lows, keeps bringing in fear into the market, but essentially over time, over a few weeks, goes sideways. And more than coming down to support catches up with it. Does that make sense? And you can still hold that trend. Everything's looking good over the longer term, but the short term or the near term, you really just got to, I guess, stay the course. You know, just keep your powder clean and dry, ready for when, if it does start holding up. Now, that's what we're looking through here anyway. Let's just see what else the markets are doing. Obviously, DAX doesn't look very good. Let's go to the weekly. DAX is right back down in some support, but again, it's still, technically, it's still holding trend up. It can get belted like that. It comes down into this anchor level around 1,200. It's right there now. Longer term anchor is still in place to the uptrend. It's still holding there. It could chop around here and then boom, up she goes again. You don't know. You don't want to be just jumping out. You've got to really respect your levels. Do your work, respect your levels, and just trade off them, because you don't want to be left holding holding the ball again if this market keeps banging up higher. Later on, if it starts building and holding a higher low, especially on the daily, we start seeing some good action off 12 and you start holding some higher lows. Like we said, you know, higher lows start stepping in. Buyers are getting back more confidence and they start lifting the market up. You don't want to be sitting there just thinking, oh, I've sold out of everything, I want it to go lower, and then it doesn't. And then you just sit there missing out another leg up. So that was the DAX, wasn't it? Well, let's go back to the Dow. We're going to have a look at the Dow in a second anyway. That's the weekly Dow. You can see that's reversion to the mean still. It's a lot of heat's come out of the market, which is good. Yeah, it's always a good thing. We've got the S&P. So really, looking at those charts, that looks a lot worse than, say, a weekly chart. It is down at a zone now where it could bounce easily. That weekly looks a lot better. I mean, it's just when anything goes vertical, the harder it goes up, the harder it comes down. Even if it's just reversion to the mean, the further it gets away from the averages, your VWAP, whatever you want to call it, it's got to revert sooner or later as there's profit taken. It's just a psychological thing. When you're sitting on profits and it's up so high, it's extended, you're going to take the opportunity to lock in some gains. I do use volume. Probably not as heavy as some others, but I do like to see volume, especially when you look at individual stocks. I do like to see volume supporting a move. It just makes it more convincing for me. I'm a pure sort of a technical trade setup. I want to be seeing high lows build. It's proof that buyers are stepping in at higher levels. But if it's not supported by volume, you might just seem to question it. It has kept me out of trades sometimes. Purely everything looks great apart from there's no volume supporting the move, then I'd always be questioning what's going on here. But yeah, I do, to answer your question. Now, where are we? So that's the S&P. FTSE doesn't look quite as nice as the others, but you know, it's broken a few key. It looked like it was slowly rolling over anyway, but the FTSE can do that easy. Slowly roll over, savage move down, and then just bounce straight back up again and start moving higher, rather than just up, spike into highs like the Dow seems to do. You know, Dow goes near vertical, then boom, straight back down. These guys tend to roll over slowly, and then drop. So we'll have to see how the FTSE goes. Now, I just want to tip over to the Dow, and I want to quickly look at the bonds. I think just to get our macro perspective of where we're standing at the moment, I've got to find my charts. That is the US bonds. They're just starting to tip over a little bit. So really we had, I wish it would stay there, levels through here. I don't know why that doesn't draw. Why doesn't it just stay there? I'm having problems figuring this out, aren't I? All right. And we had a little level through there. So that was sort of bouncing through there, pushed up to the highs. And it's just dropped out the bottom now. Now, if you followed us just for a couple of days at least, get rid of that. I still think the longer term view that it's going to spike lower. And you've got to remember, that's a clean out of, it really is a good clean out of buys, don't forget. And what the market tends to do, if it's a really clear level, like support zone, say your horizontal support like this, but there's a major support level like we got. Let's just go to the weekly. Is it the daily or the weekly? Whoop. I think that's it, except here we go. You can see where it's coming in here. So that's our longer term support. If I can get it up. You can see we've got that rise in support. They've got ahead of themselves as yields really dropped to near zero. Yields started rising, so bonds dropped off. They've pushed down. They've come up to that longer term support here. So that's just what we're saying when you've got this major support down here. And on the, say on the intraday charts, we're on the 30-minute. And don't like that. But it's got this little, it's a clear level of support there. It's more than likely going to blow it through. So we sort of expect a bit of a spike lower, and you get that last stitch clean out of people. It's going to clean them out, and then it can just turn around and reverse on itself when yields drop. And buyers of bonds at that yield level look like this. You know, they start trading the physical bonds themselves, and at a more appealing yield, higher yield or higher return on their bonds. So these, I do expect that may be just what's happening now. We've got the spike down on the daily charts. We've got a spike down on the 30, probably the 4-hourly is another good one to look at. It gives you sort of good blend between intraday and longer term. You know, that's well and truly heading south, but you've got your support coming in here. So I'm sort of expecting spike lower and then bounce. And that major trend, and then you get some bargain hunters jumping in here. If it can hold some higher lows, that'd be great, and start working its way up. If that's the case, that's going to ease the pressure on the stock markets. Don't forget, because people are well and truly focused on bonds now. If this starts heading lower now, we could get another sell-off tonight. And if that's the case, we could get capitulation in the stock markets again. Whether it's going to be 1,000 points, 300, 400, 500 points, just 100, who knows? But if this keeps putting pressure on the intraday and then going into the US session, US session, bonds are heading south. So the yields are climbing. Interest rate, the interest rate outlook is climbing as well. And that's what's been triggering the market. That's going to put continued pressure on the markets, on equities. Now, there's another thing I was looking at with equities too. There's a good little article. I think I'll put it up in our chat. It did. It's about bonds and volatility. The big thing at the moment, what they're talking about is volatility. They have to reassess volatility. So a lot of these algorithms that have got a volatility input are having to readjust for a higher volatility environment, readjust their algos, which means they have to all of a sudden start to get out of positions. You know, they might be weighted long or heading higher. All of a sudden it's spitting out sells or closing out. So what they reckon, that's a big cause of this sell-off, is that the algos are readjusted for the higher volume, which was triggered by the bonds, and they're just feeding upon themselves because every time it goes down, it's starting to smash the market. They're triggering more sells, and everyone else is selling. Everyone's joining in the fray. Then they have to go and readjust for higher volatility again and re-input that, which causes more selling. So there's just this loop that keeps feeding upon itself, and that's what they were talking about, which is what your what do you call them? Computer-generated selling, which could be triggering this market. So if that's going to happen, it could happen again. Volatility is going to be a bit of a thing too. And as soon as you get this heavy sell-off, the fear driving the market lower, they're going to be doing, spitting out the same sort of thing. So we could be in for some more wild moves as that sort of scenario plays out. Now, this week, we've got to look forward to more interest rate numbers, more inflationary figures out in the US. We've got CPI out, which is your pure inflation figure. If that comes out better than expected, you probably expect the bonds to tick lower again, which could generate some more volatility, which could generate some more selling in equities. So just keep an eye. I think that's Wednesday, if I'm right. You can always get the numbers, the data somewhere. You can get it off Forex Factory. Go there. They give you the numbers, what's coming out on whether it's US numbers coming out. And I'm pretty sure it's on Friday. And there was another good inflationary number which everyone will be keeping their eye on. I've got a feeling it's Wednesday as well. It could be later on in the week anyway. So there could be a few more triggers to come. If that's the case, like I said before, it's worth just keeping some powder dry, because it all depends now on where the ASX is going to hold up. Are we going to hold up? What we're going to do? If this market heads south again on the Dow, what's our overall market going to do? Maybe there's another leg lower. We're not looking that confident today either way. We're only up 26 points. Heading south by the looks of it. Yep, still not looking too great. There's still some room to move on the downside, obviously, even from the daily and the weekly. They're both heading south on the stochastics. Buyers are not in any sort of force at the moment. There could be that another extension lower, and it could take us down to that 57 like we just drew up on that chart before, which is here. It could just go in one foul swoop, boom, down there, and then we start holding up. Or what we sort of anticipating, what I'm more anticipating is something like that. Just holding, and then the MA basically this support to basically catch up when your consolidation is going sideways. But we'll see. Let's have a quick look at, just to finish off, the global perspective on the Dow. So like I said, my sort of view on what I'm keeping an eye on now is a spike lower on the bonds, maybe bringing in some more volatility into equities, maybe a bit more of a sell-off into equities. And then I would expect some sort of decent bounce. So don't forget, like equities rallying up near vertical, the steeper they go, the harder they come down. The same sort of thing can be said on the downside. If that finds some support here, it could be a good, nice, hard reaction back up again, as in reducing yields, higher bond prices, and maybe some good pressure off indices and stocks. And then we just have to see how it goes. I was going to look at the Dow before we get into it. So just get ready, guys. I'll finish chatting in a second. Kicks in this week, yeah. So it's going to be interesting to see how that caused. Why does that keep popping up? Or what they do to the market. This is a 30-minute, 4-hourly on the Dow, and that's it. Go here. Go. Alright, it doesn't like me either. He's on all day, is it? Alright. So that was that original sell-off. So I think it was somewhere around here with the equity sell-off. So there's one on Friday night. It was 600 points, and I think it wasn't Monday. No, it was Monday night, so it was Tuesday day. Monday night was a massive sell-off. I think it was somewhere around here on the Dow, and then the Dow just got poleaxed again during the day. So it might have been a good sell-off, and then boom, straight down. Then we got a bit of a bounce, and this is the second 1,000-point move when we come down here. And it's even had a bit of a spike lower again. So the Dow's sort of playing out to what we thought. We thought it might be a spike lower, but what we'd be looking for from here, I want to draw it up on another system. I'll draw it up on here. What I'm looking at, don't worry about that. On the Dow at the moment is more for this to hold up, or at least your support through there to start holding up. We've just taken out it's at a minor level. You can see that's one leg down, a bit of a push back up, and a secondary leg down, roughly into that support. We fell short, so that's really technically a higher low, and we reacted quite well off that level, and we've just broken through this, it's just below 24.2, 24.150, just through this level here. You can see we're green today. Now, I wouldn't mind seeing, so that's the anchor to basically that downtrend, which more or less confirms this low, confirms the higher low. So in the way of volatility, I still expect this type of thing. And then maybe as buyers start stepping and you get the higher lows, we can start working our way back up, potentially up to 25.2, retest that high, and you might get a reaction off there, or start grinding our way back up to these highs, longer term. Maybe that's wishful thinking, we don't know. But just just keep an eye on the Dow. Obviously, keep an eye on the Dow, what's happening intraday as well, what they're going to do going into the US session. But I still think overall, my overall perspective is just, I'm just happy to sit and watch things. It has to be a bloody good setup for me to jump in just at this time. Well, let's go over to those good setups. Any questions there, guys? More shakeout. The market likes to do that, don't forget. It does like to shake people out. And it needs to shake people out until you're finding that the reactions down are just not happening. People stop reacting to it. I remember years ago when I was first in the, probably 2000 something, 2000, just after the 7/11, September 11. That was a bit of a goosey mistake. After that, anytime there was news out, no sound. Can you hear me, guys? We okay? Still in, still talking, still working, I think. I think I'm coming through. Just let me know if you can't hear me there, Helen. I can. There you go. Thanks, Dave. Anyway, just remember what... Lost a minute or two. All right. Mr. 7, there you go. I knew someone would pick it up. Would be you, wouldn't it, Dave? All right, so when we were talking about that, I remember that when the news, so that happened, and anything that come through the news will cause another sell-off. Time by time, people got a bit... yeah, okay. So as time went past, people got more and more desensitized to the news, and they wouldn't react because they'd reacted before, and there's been a bounce. And they reacted, and there's been a bounce straight after. So people just stopped reacting on the news, and then the market sort of just got sick of it. And then sooner or later, obviously the news wires got sick of sending it out. There was no fear mongering anymore, and the market started heading higher. So that's maybe what we've got to look forward to. You know, these sharp moves, they get less and less. The market's starting to, buyers are starting to edge back in, whether it's large portfolios, just your retail, anyone. People are getting a bit more confidence what's happening and start holding those high lows. But once we see that, that's probably when I'd be more than happy to start looking at stocks fully again. But until then, I'm more inclined just to, just let it play out. I'd rather be on the sidelines, let it play out. If it does rebound, I mean, if it just spikes up from here, I'm sus of that also, don't forget, because after all that fear that's gone through it, I just don't see, and I wouldn't be surprised if it does bounce hard and it's on a lacking of volume. And then I'd be sort of looking for that secondary move down, because I think if it's not supported by some good volume, and I don't think you're going to see that with a spike up, I think you'd more see the volume come in if it starts holding higher lows and more prices compress down here. I hope that's making sense here, but that's what we'll keep an eye out for anyway. So in saying all that, let's just see what we've got. The ones we're sort of interested in at the moment, this is one that we sent out an alert on WHA, opened up today and it's got sold back down. So, but it's still, that structure is holding up quite well considering what's happening overall in the overall markets. So that's looking good. That's Waddle Health. We've also got something else I was just looking at today, FMG. FMG, I don't mind. Oh, geez, maybe it's just gone now. FMG's one more from the longer term. I kind of, we just dropped out, have we? Looks like we're having that problem again. All right, we'll see. So this is, we'll go back to the weekly just to see. You can see we've got this obviously massive level up at 7. Washed out that level, then we started selling off from there. Got down to as far as 450. So it's only really, it's not really, it's probably about 1/3 to 2/3 retracement of this move up. With this move, it washed out a few of these late buys, spiked back up, couldn't get anywhere, lower high. Thing is, we got buyers stepping back and around that 450 again the second time around. So it looks like if this is going to hold, I mean, especially if it gets up through this high, longer term of 540, that's a really nice price action. You got the high low here off a double bottom, nice solid base built through here at the 450, which you can see through here, holding a high low. So I was really just looking if we can do some inside higher lows in here. It might be worth looking at as a bit of a buy. Yeah. So that one I actually don't mind too bad. That's one I've got a bit of an eye on. Again, it sort of comes down to what the overall market's doing, whether we're willing to take that chance. You get in here, and of course, when fear grips, it doesn't matter what you're holding. Could be good, bad, or ugly. It's probably gonna get sold off. Or it's gonna gap down on the open as fear drives the market's lower. And really, if you're looking to buy too, don't forget, or if it, of any stock, it looks really good for whatever fundamentals it's got, and you know that the market in the US has dropped 1,000 points, you're not going to bother looking at it until at the end of the session anyway. And there may be edge into some, so you're going to be a lot more cautious as well. Even if you are in a bit of a buying, if you are looking to accumulate quite a large position over a longer term, you're going to take your time and get better prices. All right, so that's sort of, I'm guessing, all we're looking at. Obviously, still got the eye on CCA. For anyone that doesn't know, that's Change Financial. We've got a lot into Ivycoin, which we do like, which we're that's just finished their pre-ICO. There you go, Dav. Just finished their pre-ICO for their coin offering. So these guys here have got a big, good exposure to Ivycoin, which was oversubscribed. So hopefully that should get a flow-on effect. Well, you'd think it's going to get a flow-on effect. And that is another one that's held up really well the last few days of beating. I think this sell-off was prior to that Friday where the US was down 600 points. So that hasn't really got anything to do with it. It's more these last few days where it's held between, say, 119, 120, down at 105, still holding high lows. It's got a bit of selling in here still. Once it cleans that out and starts heading higher, that could be a really nice one to keep an eye on. And for us, what else we got? That's sort of, obviously we've got ACX. Anyone that's holding this, they did come out with an announcement. I think it got through the Supreme Court or whatever, Victoria. It's all good. So I think it really goes to the vote now, which I think is more of, why wouldn't you vote? Take the deal when you're looking at gains of 780, I think it was. So it's a good little offer from, I always forget the name of who they are. A takeover offer at 780, and that's been approved. There's nothing wrong with it according to the court, so it really comes down to a vote from shareholders, which you'd think would definitely get through. So that should be around 780 soon. You got that little spike of 4 or 5 cents. It's always going to hold below until fiction becomes fact, but we'll see. So that's a good one. Well, either way, we've taken a partial on that. I can't remember. We took a partial basically as soon as it gapped up here, and we're going to stop if it just starts edging lower. I think it's somewhere around 750. It shouldn't go down to 750. So that one we got in somewhere here. I think it was $4. So that's been a cracker for us. But we'll see if that one, what that does. But that's pretty much all we got left at the moment. So any queries, guys? What do we got? What does everyone want to take a quick look at? Connection like a broken tube light today again. Look, I don't know what that is. It's got to do with the upload speed, and I got the feeling that this is manipulated a bit while the old Optus. This has gone through the 4G network, so I've never had an issue with 4G on my mobile yet. I get the package that goes through the same network. The rates are completely different. So they cap it, which I think it just has issue. The more people are on there, it must have a bit of issue uploading. I don't see why. Just dropping out a bit. Anyway, we'll keep plugging through, guys. That's it. So we've got a few I think people want to look at. Now, what was it before? JB. We'll look at JB then. Was that it, I think? Aussie. We'll look at Aussie too. All right. Let's start off with... we'll go to JB then. See what... JBH. Oh, longer term is not too bad. It's just that looks nice. Won't lie to you. That weekly chart looks really good. You got this type of structure, so we're really what we're seeing now, or what I think anyway. Believe me if you want, or if you don't. What we've got is some nice longer term price action. So you've got this sort of trend holding here. You've had this big, pull back, wash up here. We tried to go again, and when you can't get up to highs again, you start retreating, and really the market needs to wash out more people, put them back on the sidelines to start building again. We've had this pop up here, retest the lows. This trend has caught up, and we started lifting again. Good pullback the last few days, or that's a weekly chart, last few weeks. So really, this could be a nice zone on the weekly chart to start holding up again. It's probably got a bit of work to do, considering what, today, obviously, what's the reporting said. Probably not so good. Got knocked on the head. Yeah, 7% on earnings, yeah. But longer term, it's got some reason to start holding up around here, but it's got some work to do on the shorter term basis. And if it can't hold up here, yeah, then it's starting to look a bit scary. It could be heading back down here, and this little move up here is just a longer term. It could be, look, this could be your first leg down longer term, and then maybe another major leg down. But for me, if I'm looking at it, I need it to start doing some work here and prove itself before I start to look to jump in. But longer term weekly structure is actually not too bad. It's just that I don't like so much. I don't like that. You know, if you get this sell off from overextended to overextend on the downside, but we keep holding up here, then it's going to start looking a bit nicer. And then looking at your daily charts for an entry setup potentially. Aussie. What are they looking at? I just want to get that up. It's probably going to drop on me, isn't it? Oh, we'll see. We'll see if we can get that Aussie up. No, we're good. We're good. All right. A view on the Aussie, it has backed off a bit from a serious resistance. It's just down now. I'm gonna have to go back down to my daily chart, I know. 4 hourly. Let's try the 4 hourly. Yeah. So it probably sounds like it's going to do quite a bit more work now, Helen. We'll see. Annotation. So the Aussie, for me, it's that kind of, it's come out that resistance zone up at 81.60. Had a big pullback, got down to 75.23. This is the, well, I have had it on a daily chart. Actually, just go to a daily. I think that it's better context from the daily. That doesn't look too bad. It's just, that's the level there. It's not a serious level like up here. It's just another level. So really that's your big move down. It's corrected somewhat up to 81.60. We've had another leg down. It corrected back up, washed out the load. So essentially once it rejected way back here, once it rejected here and just washed out the previous low, it started backing and filling, we call it, or it started reversing back up. That's not a bad sign at all. It looks like there's buyers willing to step in there. Pop back up, had another go back down. Really, it was trying to get back down to these lows at 69.10. Couldn't do it. And then what we did there over the longer term is really held a higher low. And we've held higher lows since. So we held a higher low here. And we pushed up to 81.60. And that's when the markets really started capitulating lately, is that Aussie was pushing up to 81.60. We didn't mind it up there, although I knew it was into a resistance zone. So I was more wary about it being pushing up into a resistance without really, you know, it was just this move straight up from 75.23 up to 81.60, and it really didn't stop. So I was pushed up in the resistance zone from such a low level. I'm more inclined to think it's going to back off from there, even though we know that there was quite a few short sellers that could have been fuel to get dragged back out of the market and then squeezed out as the market headed higher. But I think the fact that it was up near there was probably a good reason also that the shorts were going to start to win out, and they have, obviously. And it's had a bit of a pullback. So really we're just looking around this zone. If it can hold up around that 77.70, it is extended down here. You can see it's taken quite a bit of selling pressure to get it from 81.60 down to that 77.70 or 78, just down to that zone there. But it's still got to prove itself. It's still, you know, just dropping it down from there, dropping it down to maybe a 30-minute chart. I think, you know, you can see that trend down, lower highs, lower lows, lower highs, lower lows. Maybe you can drop that lower high here. Even, I'm sort of finding that this is more of a key level, if I can draw that. It's more just in here of a bit of an ankle. So if we pop up through that level and then pull back, and I'd be looking for a higher low to hold, because I think there could be a bit of at least retracement of this longer term leg down, a bit of a pop back up, and then you might see some of the sellers that have been squeezed out start to get squeezed back out of the market. That's probably more of a minor level. There is a good little level up here. I mean, that's still quite a bit away. So it depends what time frames you're obviously trading. I think that downtrend hasn't been broken just yet, so it could easily roll over from here, retest down here, or just continue, just build a lower high, major lower high, and then keep pressing lower back through 77.70. So really for me, I'll just be sitting there watching it for a while. the way I'm seeing it, unless you trade intraday and you trade on a 5-minute chart or whatever. But just that's more of a longer term perspective from the daily, the 4-hourly charts. I hope that makes sense. Bloomberg, I shorted it. Worth watching earnings season. Yep. And what else we got? Post website address. You can Google it, like Dave said. Anyway, the earnings. So it was the RFX. Yeah. COB. All right, just the impact of reporting, not a trade. Fair enough. That's good. RFX. Let's look at that. We'll get rid of that. RFX. Obviously, that actually doesn't look too bad. It's more the weekly. I think this for me, just off the weekly chart, it's probably got a bit of work to do. But it's that daily that doesn't look too bad. I mean, if you say, this is probably a good one for anyone that doesn't know the way we trade and the way we look at it. The way I would look at this is, I'll draw it up. And it's got to do with both of the weekly and the daily. I actually don't mind this chart, obviously. I think we've had a level down here, even a little washout here, you could say, before we started lifting, and that at that time was that level. That was your lower high here, holding markets down. Spent a lot of time here, bang, straight up, pull back, built that high low, and then we got up to here. Now we're pulling back here, and there's potential that we can hold around maybe this zone through here, 14 to 15. We still got a little lower high to contend with, so we can easily push down. We can completely capitulate. But if it turns around from here, and we sort of get that high-low holding, there is potentially that trade through 13 or maybe, sorry, that's 18, up through 18, where you can have your entry and then just see, and then you know where your risk is. It looks like it's on the rise. There's a high-low here, major high-low here. So you got this trend working for you. So that actually all set up that way. It actually doesn't look too bad at all. And that you would expect to go through 22. It's about, just by eyeballing it there, it's probably going to be a 1 to 2 to 1 trade just there. Even if it extends just like this, then you've got these levels to probably play around with to see how it reacts up there. So there could be a profitable trade. But I'm just flicking it back to the weekly chart. It's not showing, it's had a couple of moves up. And they're not, I mean, on the daily, they're not super strong moves. That's a good little move. It's not super strong where it got out of hand. Then a bit of selling come in, a bit more buying come in, a bit of selling. So that's more, longer term, it's more conducive to potentially it's going to roll over here and retest back down to 10 or find this inside level at 11. So I'd be wary from that from a weekly perspective, but actually the daily doesn't look too bad. I guess also taking the fact that maybe this market could get knocked around a bit, still some volatility come in. I'll be inclined to... I am probably a bit more sensitive than most people, but a bit more risk adverse. I'd rather just step aside, to be honest. That's my opinion, but just probably based around that weekly. But like I said, it's worthwhile. You know exactly where your risk is going to be. You know what your risk is, and honour your stops if you're going to jump into it. But yeah, there's got a reason for buying it on the daily. Like I said, it's the overall macro view that I'm just keeping an eye on at the moment. All right. What else we got? NMT. NMT, what do we got in that one? I hope we're still holding up. From here, it doesn't look too bad. We're still holding up on the stream. NMT Neo, is it? Neo Metals. Look, that one. Yeah, I think you're spot on, Nandor. The weekly, there's a few things here that you want to play out. Because this is that big, the macro will probably come out the other end, maybe. The other end of a macro correction. And this is probably a good one to chat about. Now we pushed up here, got extended up here. 1, 2, that's your secondary move down. And then we started lifting again. Holding here, holding a high low, lifted up here. come straight back into sort of that 50 zone, bit of resistance. So there is a double top potentially in play. But overall, you still got that's in play there as well, that support zone. So we could be, you know, 1, 2, you're looking at the weekly, we've headed south a bit, obviously triggered a lot by what's happened the last few days. That potentially on a smaller scale is what we're seeing here. So I'll be looking for that higher low, potentially what we've just seen previously. And then you've got a few things. You've got a higher low in context to this move down. And this is a major higher low in context to this bigger overall price structure. Does that make sense? So there's a few little things that it's definitely worth keeping an eye on Neo Metals. And that could take us up maybe if you get a setup. So what we've done, we've had that leg up. 2, I'd ideally look to, you know, buying to start stepping in at higher prices. You've got your entry, your breakdown, boom, up we go. And then I'll be looking for it to target up towards 50 or even blowing up through 50. And obviously just keep an eye out on your inside levels to see how it reacts. And if it gets up to this inside level at 47, all right, maybe time to be just a bit concerned, see what's going on. But I want to see a bit of this contraction as price contracts and it's holding some higher lows. It's inside higher lows. You know, it's just a show of strength from the buyers. And we are coming down, don't forget, at this level, getting a bit oversold down here. But in context of this low, when we're oversold back here, it's at a higher level. So it's showing you longer term buyers, you know, right through here are happy to start, you know, buying on dips potentially. You know, so this is, I think you're exactly right. I think it's well and truly worth keeping an eye on NMT. And I think I will be. I think just by looking at this last few days, you know, this little move down, it's got a bit of work to do. It could take a few weeks to work out. And ideally, you'd probably find that the global market issues, you know, this big sell-off is going to work its way out too by then after a few weeks, and they could coincide. Up we go. We'll see. We'll see. All right. I was going to say, what was that? We were looking at something a while ago. Helen. Was that it? That's not it. This is a rubbish we had. What was it? I think I'll go over here. That's not it. What is it? Oh, can't remember now. Maybe it was Bub. Bub, we had a buy on this one. Nearly got chipped in. Nearly got chipped in on this little candle here. COB. Oh, yep. Nearly got chipped in on that and BUB. Bub. Through 80, but it didn't get, it got to 79.5, so I was quite happy with that. In hindsight, it wasn't looking too bad then. That was before all this rubbish is happening overseas in the US, but that's why I guess your levels are important. That's, if anyone doesn't know, if we do send out an alert, say, if we can just drill in on this one, the idea was to buy with a push up through 80. It means that higher lows are holding, and it's starting to look good. You're looking for that acceleration higher, trading up towards 110. That's the idea. That's the plan behind the trade. Hello, COB. Yeah, so that was the idea behind it. But if you also got to have a level where you don't just sit there and buy it, whatever happens on the downside, and if it turns around and rallies straight back up, you don't buy it then because the price action or the structure's changed. So we put in that level too. The stop was around, I think it was 72.5. So if it did trigger 80.5, we got our stop down at 72.5, for example. Yep, so we go down to 72.5. But if it doesn't trigger the entry and it goes down first, then something's not quite right. It hasn't played out right because then the higher low is not confirmed. It's just been cleaned up. And then... oh, you can't hear me? Oh, I hope you can hear me. Just let me know if it's clear. It's probably dropped out again. All right. So this is Bub there anyway. That's not the one. That's probably not the one I'm thinking of, but let's go on to COH. Noisy as ever. Thank you, Helen. That's what it looks like. Oop. Not bad at all. First was at 60 or so, mid 70s. COB, I'm a goose. I can't spell a 3-letter word. There you go. There you go. That makes a bit more sense, doesn't it? Actually, doesn't look too bad. And these moves, don't forget, that flushes out a lot of these people. Was that... How long's that been going? It's just close to a year now. So it opened up, it pushed up, initial thrust up, and it got as far as 40. And then you probably find this is a lot of the placement, well, not placement, capital raisings. Capital raising, look at that. IPO, initial public offer holdings. There you go. So they're just cleaned out the market, spent a lot of time doing a lot of work through here, good part of 6 months, and started lifting into the end of the year, popped up here through November, bit of a pullback, then started building and really kicked on nice. And this sort of move really is just cleaning out these buyers. You expect something to happen there. Anyone that's probably held it from the IPO way back in, has sat through all this for a good part of a year, they've probably just taken the money and run. Always worth doing that. So you had in the capital raising at, you say 60? So mid 70s. So I'm guessing it was around here somewhere. Popped up, back down again. So actually doesn't look too bad. What you'd want to see here, I don't mind this sort of thing. When you get this wick, like nice rejection, and you've got this one leg, it's tried to get up to new highs, or at least trade up to the highs. It got to 85. It had to have a deeper correction. That's the secondary move that we always talk about. It's a deeper correction lower. That's just to drag out more buyers, put them back on the sidelines, clean them out, and then potentially start building. So if you're getting a nice little rejection candle like that, it's always good. I think it's always, look, not just yet, because technically I think it's got to start pushing up to 65 and then maybe, a bit more contraction over a period of time before we start holding potentially what we're going to be a major high low. All right, where am I? Sorry, then I've got to fucking go back to where I am, eh? We're getting there, Helen. We're getting there. CAB. Bubs. Let me see back where Bub was. All right. Well, that makes more sense then, doesn't it? Ooh. Well, there we go. There we go. That's making more sense to me. I think I'm clear as mud now. Go on, give it to me. I've only had 2 coffees, guys. Come on. Well, that looks good. That still don't mind that one either. It's got a high low here. Pushed up to new highs 110, pulled back, it's cleaning people out. Maybe that takes off again. We'll have to see. I actually don't mind the other one. What was the other one? COB. COB's worth a look too. Cobalt. Not a massive. I'm just wondering if it's cleaned out enough volume through here. Yeah, I'm definitely confused. Let's just go on to something different. I'm going to too. All right. Golly gosh. Been a big weekend for me. I didn't even really drink. That's the shame of it all. All right, let's go and see where we're at. I'm gonna ban you, Helen, soon. And if you support an end, I'll ban you too. All right, where we're at. Down 15 at the moment. So we pressed down to nearly 40, bounced back up a bit, and pressed down below 58. So it's holding up like we were saying before. It's potentially going to hold up around that 58. Now, if we get a close around that level, sort of where we are now, around 20 to 30, closing there, it's still holding up considering what's going on. But again, I think most of the heat in the global market has got to come out of the US. It's sort of not a lot to do with us. Not like, getting into reporting too. Sidekick. Getting into reporting season 2 in Australia, that you could find a bit of support there as well. So again, we've gone nowhere near as hard as the US, and even the UK and Europe, DAX, whatever. They've all kicked on really, really hard. We haven't. We've been grinding higher more than anything else. We put on some gains, it's been quite good, but nothing like what we've seen in the US and over in Europe. We sold off quite heavily the last couple of weeks, or last week, quite heavily, which I think is typical of ASX and overreaction. But I think if we can get some nice reporting season come through, better than expected, you should find some support flow through into the market. Just have to see how it goes. And I don't mind if, we start doing that. We might get a bit choppy, but I want to rather see it choppy and hold levels than start getting sold off again, because I think to repair from another big correction lower is going to be a bit tough. And just for the sake of us following the US, it's going to be a bit of a tough one. But we're not looking at raising rates at all in 2018. We'll have to see what the outlook is from the RBA into 2019. Yeah, but we'll just have to see. But whereas the US are looking at maybe 4 times this year, which is going to put the pressure on them, which we know that. So that keeps going that way. We might see some more heat come out of the US and we hold up okay. That's what I'd prefer, ideally like to see. Anyway, do you recall me saying that we'd come back to the channel? What's that in reference to there, Helen? Sorry. Oh, yeah, actually. Was that on the ASX? Was that, we were talking about the ASX now? I'll be very clear about that. We'll see. I'm guessing so. I think we had a misunderstanding back then as well, Helen. Yeah, we're probably looking at it now. Yep, all right. Yeah, we have. I mean, that's what we were just saying before. It's still looking okay. Oh, we haven't got it now. It's still in that zone. It's just like we're talking before, with it holds up here. We have a little spike lower and bounce. I mean, only time's going to tell. Not bub or not COB, not anything. Hey. God. All right, I'm going to have my 3rd coffee before I start on Thursday. That's for sure. All right, we might just call it a day there before Helen and Nando pick on me too much. Glad I haven't heard too much from you, Paul. Been fairly quiet back there. I'm guessing you're on my side. Davin, I know you're not, but anyway. Just going through a few comments. If I've missed anything, just let me know. And then you can send it through to support@tradedirect365.com.au or support@tradesetup.com.au. Any queries you might have, just whack it through there. I'll probably stick to the support@tradesetup.com.au. And I can always just get back to you on an email, or if it's decent enough to talk about, if I think it's worthwhile and good just to share with everyone, as long as everyone doesn't mind, I'll put it up on the stream on Thursday. But between now and then, just, I guess, keep an eye on that overall. Yeah, you wrecked me. Keep an eye on that overall macro correction. Paul's probably a bit weary himself, I reckon. The young baby's keeping him on his toes. I know that for sure, so thank you, Paul. Too hard today. No, that's fair enough, mate. Thanks, Gabriella. Now, what was I just saying? Yeah, so the next couple of days, just see what happens. Keep your eye on the macro picture. Yeah, I know it's about earnings, but I'm still inclined on good earnings. Triggers a bit of buying. I'd still be inclined just to step aside, just to see what happens. I just want to see this shakeout, to see what's happening there, whether it's got more to go, whether it hasn't. We'll just have to see. Let it play out before you start loading back in again. That would be what I'm sort of looking at anyway. The thing is, I actually don't mind, because I mean, a bit of volatility means you can sort of play around the intraday trading. And like I said before, if you do have a bit of a look at that, even if it's got low exposure, it's worth just putting 1 or 2, if you like some CFDs, playing around on your ASX200, getting a bit used to, your setups, your trades, doing it lifetime, so there is a bit of pressure in there. I mean, maybe there's going to be no pressure even with small amounts, but it gets you looking, honing your skills a bit, especially from a technical perspective. And it's good practice too, anyway. I like playing around. I know Dave loves it too. Just looking at a bit of volatility comes into the market. There's always going to be some good opportunities intraday, and it means by the time it's closed, you're out. See what happens in the US, and then you're looking at your bigger picture, or your portfolio on the bigger picture anyway. All right, thanks very much, guys. I'll speak to you all again on Thursday. Have a great few days, hopefully. Cheers, bye.